Hello, my name is Michael Strickler. I am the Director of Lightspeed Learning. And I'd like to talk to you a little bit about, before we get into our podcast video, about what we're going to be talking about today. We're going to be talking about market changes. And in particular, we're going to be talking about life insurance, the different types of life insurance. But going back to the market changes, things have changed a great deal in the last few years, especially in the personal lines market, to where companies are no longer taking applications or actually turning people down for renewing their policies, etc., and all the things that go in between. We've experienced it all. And hopefully this will shake out pretty soon. But in the interim, we still have to make a living. We have to get out there and find somebody to talk to about what we do have and what we do offer to sell. And we do have a lot to offer people. Even though our personal lines market isn't what it should be or used to be, but there are other markets, for example, like the market changes in commercial markets. Now, the commercial markets have changed a little bit as far as what they do cover, but it is a very vibrant and very robust market. There's still a lot of people that do need to insure their businesses and, of course, have the knowledge of what they do have insured and what they don't have insured. So that's where we come in. We can explain those different types of coverages. But if you're not really into going into the commercial direction, maybe that's not what you want to do, then there are other markets that you can look into. And change isn't easy. Change is difficult, and it can be. And I find that the older you get, the more difficult it is to change. But it does require a certain amount of research, or at least you should do some research before you get into various different markets, making sure it's a good fit for you. And you have the markets that you can find that'll fit your client's needs when it comes into the commercial markets. So that's something to consider. Now, let's talk about prospecting for different markets, okay? Everybody needs insurance, as you know, for different things. Maybe they are business owners, or maybe they need health insurance, or perhaps it's life insurance. All these different types of products out there are things that we can offer our clients, providing that we're properly licensed, which I'll get into in a bit. But just remember, when you are prospecting, you do have a lot of clientele out there that you've already done business with in the personal lines market. What's wrong with sending out a letter or even a phone call and telling that the different markets that you do have available? Now, one market in particular that we're going to be talking about today in our podcast is the market about life insurance. Now, life insurance is a very, very viable product. Out of all the products that we sell, one product in particular is definitely one particular product that people will collect on as long as the policy is enforced, and that is in life insurance. And the reason why I bring that up, in property and casualty, it's a what if it happens. It's a what if it happens. For example, you could drive your car, you could have a business insurance, your homeowner's insurance, etc., your whole life and never have a claim. But on the life insurance side, a little bit different. The life insurance policy is more like when it happens. When it happens. It's not if it happens. And all that means is all of us are going to pass away, unfortunately, someday. And the big question there is, how are you going to leave your loved ones, or perhaps maybe your business partners, if in the event of a premature demise? So those are things to look at when we're talking about life insurance. And one of the interesting topics that we're going to bring up today is, what is a better policy? What is a better policy? Is a term a better policy? Is a whole life better policy? Or maybe some of the policies that have a little bit more romance, like your variable life insurance policies, indexed universal life policies, or just straight up whole life. Everybody's got a different twist on it. But the bottom line is, if it's a term policy, it doesn't necessarily mean that it's a bad thing. It could be a good thing. It's people that need term insurance or have term insurance a lot of times have a great need with minimum outgo. Their funds are a little bit tied up right now. And so term insurance is a very good way to go. For example, you can get $1 million worth of life insurance on, let's say, a 40-year-old man for $50-$60 a month, somewhere around in there, which is a very good value if in that event that person passes away. And then you look at some of the more exotic policies. They require a little bit more premium. That same policy, $1 million policy, would more than likely cost that person not $50 or $60 if it was in a variable universal life or a whole life policy. It'd be more like maybe $400 or $500 a month. So you see, everybody's different because there's a difference of what a person can pay and what a person will pay. But going back a little bit even further than that, is this the right policy for the client? Is this the right amount? Just because you show him $1 million policy, maybe he needs 10 million, or maybe he only needs 100,000. So part of the thing about life insurance is doing a good fact-finding mission. Not only finding out facts about the client, but finding out facts about their health, making sure that they're in good health. For example, I see this all the time where an agent shows a client a preferred risk. So therefore, the premium that's been generated by the computer kicks out an illustration form with the lowest and least expensive premium possible by that company. But does that mean that the company is going to issue that policy in the direction of a preferred risk? Not when they find out that he's had some issues with his heart, maybe he's had some, other medical issues that weren't talked about earlier, that will come up in the exam. So when they have to take their medical exam. So those are things to point out, making sure that you get the proper information from the client. So when it gets down to the point where you are going to actually submit the application, you're going to pretty much know what type of rate that they're going to give the individual. So it's a fascinating business. And I'll tell you what, some of the most wealthiest people that I know are life insurance people. They've sold life insurance for years. And in my opinion, it is the easiest part of insurance to sell because, like I said before, everybody's going to die someday. And the big question is how are you going to leave your heirs, whether it's your family members or your business partners, or whichever the case may be. Let's talk a little bit about licensing. If you are licensed for property and casualty only, it's not that big of a deal to get a life insurance license. All you have to do is complete the required pre-licensing. If you wanted to do like just life insurance, that would be a 20-hour program. If you wanted to do life and health insurance, that would be a 40-hour program. That's 20 hours for the life insurance side of it, and 20 hours for the health insurance side of it, which would allow you to not only sell individual but group health insurance, but you could also sell long-term care and disability policy, which is probably one of the most overlooked policies of them all. Disability insurance is very important. But what you're going to find, though, when you check out this video, and by the way, when you watch the video, you can either just watch it for information, or if you wish, you can spend $10 and get continuing education credit for this. That's all you have to do. I do believe we have 3 questions for those that are wishing to get credit for it. 3 questions at the end of the program that you have to answer. Very simple questions. All right, so without further ado, let's get in and check out and see how what we think of the program. Thank you very much for your attention.
Welcome back to the Up to Speed podcast. Joined here with my father, Mick Strickler, and my name is Elliot Strickler, and we've got a very special guest, Mr. Paul Kaplan from Back 9 Insurance. And so we're here today to kind of go over Life Insurance 101, if you will, kind of a basic overview that some of us struggling P&C agents right now might be able to benefit a little bit from the tough times that we've got going on in the personal lines world. But so a little bit about yourself, Paul. What can you? How long have you been in the business to start? I guess just to.
I'm a fossil. A dinosaur is someone who reaches the age of 80, and once you pass age 80, you become a fossil. So I now qualify. I started in the business April Fool's Day, 1964, and I've been having a really good time ever since with a lot of fooling around.
All right.
Very good. And then, Mick, you've been in the business a little bit.
I'm coming up on 43 years in the business. Loved every minute of it. It's a great business.
So you guys have basically forgotten more about life insurance than I think I have known passing my test. And
with your experience and my experience, as well as Elliot's, we probably have 10, 20 years of insurance experience here.
Wow. That's pretty impressive.
That's a lot. Yeah.
Well, yeah. So again, from the P&C side, we've got an agency, and it's been tough out there, especially in the personal line side. And so looking at products that you can sell and opportunities that are there within your own book of business versus the struggles that a lot of us are having. And so hopefully this podcast today can help ease the pain and open up some new opportunities. So Paul, to start, how would you say, qualifying who needs the life insurance products, would you say?
It's a very simple answer. Everybody needs life insurance. Somewhere along the line, you're going to kick the bucket. You're going to pass away, and you want to leave something as a legacy to a loved one. So who needs it? Everybody, every profession, from professional to somebody who's in the trenches, first responders, doctors, attorneys, CPAs, you name it. There is a need for life insurance, and what we do is try and identify what those needs are and then provide a solution.
Sure. And so as far as a personal, being a personal lines agent or a PNC agent, like you said, anybody that's got a family is what comes to mind first. If you've got kids, you want to make sure that you're leaving them something behind there. And so, anyone is pretty broad, but what would you say, like business owners, basically people that have something to lose?
No, absolutely. If you talk about businesses, for example, we have key man insurance, we have partnership buy-sell agreements, we have all sorts of ways to indemnify the loss of that person to someone else. So what you want to look at is what type of insurance do you want to talk about to these people? Mm-hmm. Do you want to get into term insurance, whole life insurance, universal life insurance? Those are the ways that we've done it ever since I started in the industry way back when. In today's marketplace, if we're talking to people and we want to come up with a solution, we say, are you looking for protection? Meaning, do you want to provide a death benefit and a guaranteed premium for a period of time? Or do you want to accumulate something on the inside of the policy, meaning that in addition to the death benefit and the guaranteed premium, do we want to provide some sort of cash buildup that we can use down the line to pull out money on an income tax-free basis, which whole life or universal life gives us the opportunity to do, or in today's nomenclature, what an accumulation policy will give us the opportunity to do. So if you're talking to young people, we say most bang for the buck, biggest death benefit, lowest premium. As you get a little bit older, maybe a little bit of accumulation, meaning most bang for the buck will now be living benefits. So cash value, if you want to get into chronic illness riders and you want to get into critical illness riders, terminal death riders, the living benefits part of a policy, or simply just the cash accumulation. These are all types of discussions that we at Back Nine will guide you through the process as to what's best for your client and which client would you like to chat with.
Sure. Wow.
See, a big thing too is when you are sitting there talking with someone, it's always a good idea to find out what their feelings about life insurance are. Many people have been through a life insurance premium, and part of the problem and the reason why they didn't buy it is that they were confused along the way. And you really have to be careful, so it's a good idea to qualify your client even before you get into showing them some plans as far as, what do you need? How much do you need? For example, easiest thing to come right off the top would be, I'm going to look at something that, or present something that's going to give you an income if in the event you die or have a premature demise. I'm going to look at a program that will give your spouse an income for the next 10 years. So if the guy makes $100,000 a year, take that times 10, that's $1 million. And if you want to throw in paying off the person's house or maybe some debts or maybe some loans, whether they're long-term loans or short-term loans, whichever the case may be, that's where you're rounding out your insurance program. Because always look at it like this, and this is the way I've always looked at it ever since I started. I had a manager that was just really, really gruff manager. He was really good, taught me a lot of really good things. But one thing that he always said to people, the reason why people need life insurance is two reasons. You either owe somebody money or you love somebody. So if you don't owe any money or you don't love anybody, we don't need to talk about life insurance. We can talk about whatever else you want. We can talk about baseball, football, whatever you want to talk about. And it was so point on. But the key thing is a lot of people, a lot of agents, I should say, assume that their clients want life insurance, and maybe they do. Maybe they do. But there's some critical questions that you need to ask your client first before you even present them with anything. Back in the day, we were pretty much taught just to show up with an illustration, just show up with $100,000 worth of insurance and say, let's arm wrestle for an hour and a half and see who comes out on top. That's not really a very good way to sell insurance because two reasons. The person doesn't really understand what they bought. And the second reason is that down the road, even a year or two, they stop paying the premium and therefore the policy lapses and it's not going to do anybody any good at that point. So there's a little bit of a skill set. It's really good to have somebody that can train you, show you the ropes as far as, a good quality presentation and where to take it. Be more of an information person rather than a, grinding out salesperson. It really helps, But the key thing, though, is finding out how much insurance, what an insurance program would do for the surviving family. It's very, very important to look at. And I'm sure Paul's got some good old stories back in the day when, how insurance was presented. A big policy back when you probably started was what, about maybe $10,000?
$10,000 to $25,000, and
money.
we used to sell. The original policies were 5-year term, 10-year term, renewable, convertible in those days, where you would have guaranteed rates all the way out to age 95 or 100. Never had the re-entry term that we have today. So at the end of a 10-year term today, you have to requalify or you go to the skyward bound premium provisions from the 11th year on a 10-year plan or the 21st year on a 20-year plan. But it's very important today to try and tune in to what your client is doing. And the best way to do that is to start with a little bit of a fact finder. And every one of our life insurance carriers offers these basic fact finders, information that Mick was referring to. We want your name. We want your date of birth. We want to know if you've had any of the dread diseases. We want to know what medications you are taking and what you're taking them for. It's not just enough to name the medication because today so many medicines have dual purpose utilization. So those are important things. We want to know family history, mother, father, brother, sister. Did anybody pass away prior to the age of 60 due to cardiovascular event or internal cancer? Because we underwrite on family history as well as we underwrite on your history. And then we can get you a quote that is going to be very, very close to what the actual result will be, assuming we get all the story and all the facts up front.
So you don't want to give somebody a preferred quote and then you come back once you submit the application and find out through the underwriting process that this person has had some serious medical issues because your premium is going to go from a reasonable premium to something that is not very good.
Something called a decline at the tail end.
Yeah, there you go. And this is not a lot of wasted time, wasted energy there. So make sure you approach your clients correctly in that direction. Sure. That's for sure.
Yeah, I've been on the wrong end of that more than once, as far as or the customer tells you, oh yeah, I'm totally healthy, and then you get the app in and it comes back and you're like, well, that's not totally healthy, but.
You will find that everybody is perfect when they first talk to you because the doctor fixed what was wrong.
Sure.
Oh, I had a heart attack and 4 stints, but I'm better than I was before.
Yeah,
so now I'm perfect. Why should I even tell you about it?
Right, you probably
sure.
are. Yeah, definitely.
But so you've mentioned the terms, and I mean, as far as somebody listening to this podcast that's already life licensed is going to have a pretty good handle on what a term, what a whole life. But for those maybe that don't have, how do you figure out, okay, this guy needs a term, this guy needs a whole life, this guy needs a universal life. So there's all these different types of coverages. So how do you pick the correct policy for the customer?
It's a good question.
We call it needs-based selling. We find out what the needs are. How old are you? How old is your spouse? Do you have children? Are you going to provide a college education tuition for them? What does that look like? I have a great niece that just graduated from GW. I mean, $68,000 a year. I'm amazed at the tuitions that are back east in some of these universities and colleges. So we need to know, Do you want to spend your own money or do you want to spend someone else's money? Someone else's money is the insurance company. And if you take a look at the premiums, especially if you're in your 30s, 40s, 50s, versus saving the money and putting it in a bank, a savings and loan, buying a CD and trying to save your own, the insurance company comes up with a pretty darn good return on the premium payments you make. And so that's what we want to look at. What do you need it for? How long do you want the coverage to stay in force? And then we let the computer go to work and figure out what the numbers look like. And we come up with all sorts of compromises between strictly protection and accumulation type policies. And we can do mix and match and have all sorts of fun in the process.
Sure.
It's very good. Yeah, a big thing too is just once you find out exactly how much the client needs through your needs analysis, that's going to come down to a number, whatever the number is, 500,000, million, 2 million, whatever it is. Bottom line is that's when you go to work and figure out what is in their budget and there's a difference between what a person can pay and what a person will pay. Just because the person has the money, a lot of money, doesn't mean that they're going to pay a lot of money for it. So it has to make sense to them financially. You found the need, you've discovered the need, uncovered the need, I should say. And now all it comes down to what type of plan do you want? If you want something like what Paul was talking about earlier, as a term or a protection plan, strictly protection, there's no cash value in the policy, that's going to be your least expensive policy. There are good things about that, obviously the premium, but then there's also some downsides because a term policy or a protection-only policy is eventually going to end. Might be 10 years, might be 20 years. And then a bigger question is what is your situation going to be in 20 years? Are you going to need insurance at that time? Back in the day, it used to be once a person turned 65 years old, they didn't need insurance anymore, maybe a little burial policy. But nowadays, that's not the case. People are, obviously working way into their 70s, 80s, as it be. And, they need protection up until they die, basically. So that could be up until 100, or some of these policies now go to 120. So these are all things that you have to factor in when you're talking with your client. So what they do is they buy a policy and it's going to be with them, hopefully, for the rest of their lives. But there's many different things that you can do, and it's very exciting to sit down and talk with somebody. And by the way, you have a really good relationship with a lot of these people that you write, your clients. They not only become clients, but some become very good friends you'll have for the rest of your life. It's amazing. It's a very, very neat business that way. One thing I really like about this business is the people connection. It's unbelievable.
Sure.
I'm gonna throw one thing in here. My beginning of my career, I tried to figure out the easiest way to get new clients. Prospecting is the insurance agent's bane of existence, unfortunately.
Yeah.
In the good old days, you literally went out. You've heard about cold calling. Cold calling meant knocking on doors of strangers. Oh my goodness, meeting
We used to
people
do
that you
that.
had never seen in your life, and asking them, "You want to buy a life insurance policy?" Well, that approach didn't work very well. So what we did was I did something a little differently. Tried to be a bit unique. Even though you can't modify the word unique, I did. I used to call on property casualty agencies, and there used to be a book called the Kirshner Directory for property casualty people, and it listed property casualty agents in two different ways. One by location, so you could do a route map and just go from door to door to door across the street from one another, or you could just look them up by name. And I would walk into their office, and the property casualty agent was very, very good at sitting down at his desk and waiting for the phone to ring and taking an order as that client called in. I had a friend who was a woodcutter, and I made a little paperweight. It said, "Yes, comma, I sell life insurance too." And I put it on their desk and walked out. And then I'd come back in. I said, "Anybody look at your sign?" He says, "Oh my God." He says, "I can't believe people didn't know I sold life insurance." And they started placing orders. So you have to be creative. You have to make a brand for yourself. You have to do something that's unique, a little bit different than the guy next door.
Sure.
And people will be very, very happy to chat with you because you're going to offer them something that no other insurance, in quotes, salesman has done, because you're going to be a professor and educate and teach, and it goes a long way.
Well, and I think about a little bit more of a new school. You could just put that in the bottom of your email signature because nobody comes into the office
Good point. That's why I don't do the paperweight
Yeah,
anymore.
yeah. That's interesting.
But if you put that in your email signature, I mean, it's like we do with our life insurance. Get a quote. Everybody pushes a button, and all of a sudden you can get a quote now.
Sure.
Exactly what Elliot said. Say, yes, I sell life insurance too. And from the property casualty person who has the client in the palm of his hand because he takes such good care of them, you have a built-in connection that I would walk in as a stranger and he'd say, no, so-and-so is my agent.
Mm-hmm. Yeah, no, absolutely. And then, I mean, we've talked about it on I think the first podcast we did, the retention rate, if you've got one policy, you know, on the PNC side, you've got one policy, you've got a certain percentage chance of keeping it. If you've got two, that goes up. If you've got three, basically that guy's not leaving you. And then if you've got 3 policies, 4 policies, and their life insurance, it's a client.
Yeah, statistically, they'll be with you for a long time, long time.
You're now becoming their financial advisor rather than just their agent.
Exactly.
Sure.
You know, if you just have one policy and that guy might leave you, it's like, for example, if you just have their auto and all of a sudden they leave you, and the reason why they left you is somebody packaged their homeowners and their auto together and now they're gone. You probably wrote some life insurance on you too, or them. So there's some really good things. And just to go back a little bit on what Paul was talking about on prospecting, probably one of the biggest prospecting tools that you can have is referrals. Just ask for them. That's all you have to do. And you're going to get a lot of no's, but you're going to get some yeses. And the yeses are the ones that are going to be very, very good interviews that you can go out and chat with. But if you don't ask, clients won't offer them to you. They won't say, hey, you know, unless maybe somewhere down the line they could call up and say, hey, my son and daughter-in-law just had a baby and they need life insurance, okay? Because those are really cool phone calls. You just call them up and said, hey, your father-in-law said you needed some life insurance, and so that's why I'm calling you.
Sure.
You can have some fun with it. But, you know, referrals, that's the name of the game. And a lot of people just say, well, I can't get referrals. Well, how are you asking for them? Are you asking for them? I had a boss that was more into referrals than he was anything else. You could bring in 3 sales and he'd say, that's wonderful. But let me ask you this, how many referrals did you get from those 3 sales? And he wanted 3 referrals from every sale. And he goes, well, you have fish today that you can eat, but tomorrow you have no fish. So now you got to go out and throw the net out again, using that analogy. And it was true. And he took our office from probably one of the bottom places in the company up to number 2 within a very short period of time, like 2 years. So it works. All you have to do is just make it a priority. That's all you have to do.
Sure.
And Mick said something interesting about asking for referrals. How do you ask for them? If I walk into somebody's home and I say, give me 3 names that I can call and represent my product to, odds are you're not going to get 3 referrals. But if you go into that house and say, God, I see you have a brand new Lamborghini in your driveway, who are the first 3 people that you want to show your new car to? They're going to give you those names real quick before they think about what you're asking.
Yeah, right.
And the minute they give you those 3 names, may I call them and may I share my story with them?
Mm-hmm. Sure.
You'd be amazed how many more referrals you get the minute you relate it to. Who would you show your new car to? Who would you show your new home to? You just bought a new suit. It looks beautiful. Who would you show it off to? Get those names that way, because if you ask for, who can I ask you about life insurance, not going to happen.
Yeah, right. That's right. It's one thing I heard this a long time ago in a meeting. If you want somebody to stop talking to you on an airplane, just tell them that and they ask you what you do for a job or a living, just tell them you sell life insurance, and they won't talk to you for the rest of the flight.
Is that so?
It's true.
Sleep peacefully from then on.
Yes, exactly. Oh, right. That's great. All right. So moving on to other things, going back just a little bit on policies. You know, I think it's important to understand your product. There's no doubt about it. Whether it's, you know, a protection only plan, universal, index universal life variable, whatever you're selling. But the key thing is make sure that you got the amount of insurance down first. That's the key thing. Because a lot of times the agents will represent just a particular policy. Maybe that's something that, you know, the whole office is selling. Well, that's great, but, you know, not every policy is for everyone. Everybody's different. We're all kind of like snowflakes. So the key thing is finding out that amount of insurance and do your fact finding. That's really critical. And get that amount of insurance down. Then you can figure out whether it is just a protection plan like term, or if it's something a little bit more exotic like a whole life with some bells and whistles, some riders, long-term care riders, critical care, whatever the case may be. But that's how you get in there and do really, really well. And open yourself up to ideas. Open yourself up to, going to your training meetings. If there's an event going on, somebody's got a new product coming out, go. Doesn't mean that you're going to sell it, but I look at those meetings, and Paul and I and Elliot have all been to a lot of them. If you can walk away with one good idea that you got out of that meeting, that sales presentation, whichever it may be, that's a win. So those are things that you can take with you. But it takes a while to get a really, really good PAT presentation down to where you feel comfortable with yourself and you feel comfortable explaining things to people. I always had a manager that said this to me. He says, if you can explain this to a sixth grader, then you understand it yourself. But if you can't explain it to somebody that's 12 years old, this is a problem. You're going to have a problem explaining these policies to people. And, just some of the new rules that have just recently come out for new agents that are licensed in the year 24, last year. They have to do a 4-hour course now that basically explains the difference between term insurance and whole life. And the reason why that is some agents will tell people that, yes, you bought a whole life policy, when in fact they purchased a term policy. And when are they going to find out? They're going to find out at the end of that term, whether it's a 10 or a 20-year term, but they are going to find out. And, that's not a good way to go. So this is why they have these courses that we all have to go through and complete. That's just for new agents, not existing agents, just brand new agents have to go through that course. But it's really important that you explain honestly upfront exactly how the policy works, the goods as well as the bads. The bads meaning like, if you don't pay your premium, what happens? If it's a term policy, obviously it lapses. But if it's a whole life policy, there are cash values in those policies that you may be able to use towards your premium if you're in a tight crunch, which is, these types of ideas we're going to go into in other podcast, go into a little bit more detail on product, the various different types of policies that you can get into. We'll also have one on, prospecting. We'll have one on, all the things that go along with what we do, even right down to how you dress when you go see a client. Because how important is it how you dress when you go see somebody? It's important.
Brooks Brothers suits are out, Mick. I'm sorry.
Yeah, there you go. There you go. But it's good to be tidy, okay? You never have to worry about ladies being tidy, but men sometimes get a little sloppy in their wear, in their outfits. But anyway, those are some of the things that we're going to be discussing. And so when you're ready to go out and talk to a client, you're prepared, you're ready. You've got something. And it's all about enthusiasm too. You have to be enthusiastic about your product and what you're doing, because you are in a wonderful position to help somebody out, especially if someone dies. When somebody passes away, like we all will someday, unfortunately, the key thing is there anything left for the family? How is the family going to survive? And if you have a problem with that, or you're thinking, oh my God, this would be a disaster, then life insurance might be a perfect option. But then again, on the flip side, if a person says that they don't need life insurance, well, you got to go back to that. Do you love somebody or owe somebody? There you go. So it's one of those kinds of things. A lot of people don't understand life insurance. I've even had some people say to me, I think if I bought life insurance, I would probably die. And how do you handle that? Well, you're going to die anyways.
Yeah.
So
Yeah.
To tag onto that for a second, early in my career, it was Transamerica Occidental Life, and they came out with an advertising campaign. It was the same people that ran the VW campaigns for the bug way back in the 50s and 60s, but they came up with an idea of a gentleman getting out of a coffin, and the tagline under the coffin was, "You don't need life insurance, you need death insurance."
Oh,
and they sold more policies off of that ad. And in those days, they solicited the P&C marketplace for agents. They were one of the largest brokerage oriented life insurance companies in the country at the time. And they built a fabulous reputation doing just that. But again, you have to be able to explain the product in words that the client will understand and make them realize that they need it. So you present the story, you present the need, and then you present the solution. And that's the best way to sell a policy.
Sure.
It's great.
Well,
It's excellent.
so back to the this new CE requirement of the term versus the whole life, and licensed agents now have to take that, even though if you got your license, that was part of the prerequisites to pass the test. You had to know that. But so term insurance, it's a stated amount. So say $1 million policy for a stated amount of time. So say 20 years. After, if you don't die in 20 years, that's it. You're renting the policy. Is that
Pretty much.
Yeah.
whole life? Same $1 million limit. It's going to protect you to age 100 or
Correct.
120 now.
120 if it's universal.
And if
And whole life too.
and so if you don't die by age 120, which that would be impressive, but then there's you were saying the return of premium options on some of these
Well,
policies.
there's some universal life policies now, the accumulation policies, whether they're current assumption universal life, whether they are guaranteed universal life or fixed indexed universal life. They basically say now that after 15 years, if you decide you don't want the policy anymore, they will give you back 50% of the premiums paid. After 20 or 25 years, if you make the decision that you no longer want the coverage, they will return up to 100% of the premiums paid. So I always say, what's cheaper than free? Now, the insurance department doesn't like us to say that, but the reality is if somebody buys a policy and are willing to pay a little bit more money, I can sell a policy to a 70-year-old gentleman, and 15 years down the line at 85, well, I don't need it anymore, get 50% of his premium back. It's cheaper than any old-fashioned term policy he could have bought, assuming they would have issued a 15-year at age 70, which they do. Some carriers will go. Your maximum cutoff for term is usually around age 85, just about life expectancy. So the insurance company is going to be a very happy camper going to the bank, collecting your premiums, and then not having to pay a death claim. So that's why term insurance, I had a very close friend used to say that term insurance is like wetting the bed. Sooner or later, you got to get up and do something about it.
Yeah.
So it's a temporary solution to a permanent need.
Sure.
That's right.
Well,
That's right.
But I mean, as far as let's say I've got a customer, cross sell a PNC customer. I've got home auto, the business insurance, and we get to talking about life insurance. Let's say he needs $1 million or $2 million worth of life insurance, and we go through and do this fantastic presentation of a whole life policy. It's way too much money. Can't afford it. So there's the term option, which is obviously going to be much less expensive. Obviously, the benefits are less, but to get them the kind of temporary need, would you agree that that's a good route?
It's a good route, and we can blend. It doesn't have to be all whole life or all term, all protection, all accumulation. It can be a third, different lengths of time, different amounts, and protect the various periods of coverage that you're looking for, the amounts that you're looking for, and the premiums you want to spend up front. Take a look at a young couple that's bringing up a family. We don't have as much money to spend on the accumulation side, but we have a lot more money to spend for the protection side, so we can do that. Mm-hmm. Or we can start with a very small permanent that will go forever and be the base of the financial plan, and add the term insurance or the protection side to it for 10, 15, 20. We have term policies now, a couple of carriers that go out as long as 40 years, believe it or not. So we have 10, 15, 20, 25, 30, 35, and 40-year plans available with a couple of carriers. Most companies terminate at 30 years. 30 years is the max you can buy, but we have 35 and 40 with a couple carriers now. So all the coverages are available, and we are going to get into the ease of quoting this a little bit. So I'm going to just say one thing. At Back9, we have developed the first consumer-facing software package where you can be as active or inactive an agent as you want to be. You can put a internet address in your email, and you can address www.back9ins.com, and the client can shop. We will shop for the protection policies and accumulation policies. It's the only platform on the market right now that has both term, permanent, universal life, long-term care insurance, and we actually added an annuity monthly payout feature on it, but it's all automated so that the client can go through with or without your assistance. Shop, see something they like, and immediately go to a drop ticket where the client will complete the information, or you, the agent, can help the client complete it. At the end of the day, it will schedule the paramed exam in real time if needed. There are companies now that will write insurance without, we call it simplified issue, without a paramed exam. But this Back 9 quote and apply platform makes it so easy for you, the agent, to sit back and refer a client and not take a whole bunch of time in the process unless you want to go from submission to commission without active involvement.
Sure.
Well done. Yeah, technology is really, it's changed so much, and it's going to change more in the future, especially with AI. So there's a lot of really very cool things that are coming down the line that not only helps you as far as the time management, but gets the ultimate goal of getting your client what they need. And, you know, you guys alluded to the fact of like what you were talking about, Elliot, as far as like a term policy or whole life, you know, what can I afford? The key thing is, even if the person can't afford perhaps maybe the cash value policy, and that's okay. We understand that, but the need is still there. The need doesn't go away. And once you sit down with a client and you go through, like I was mentioning before, the income, and you put in maybe paying off the balance of the mortgage, if in the event of their premature demise, all of their debts, pay all that up. That's all you do, is you just add all that up. And in college, like what Paul was talking about, you could put that in there too. If something happened to you, you want to make sure that your kids go to college. Those are the things that, you know, you're going to be your bottom line. That's going to be what the amount of insurance that you're looking at having your client purchase. Now it comes down to what type of policy. That's the easiest part, because whether it's a mix of term and mix of whole life, doesn't matter. We got that guy covered. As far as down the road in the term policy, well, we can discuss that need down the road. But at least they're covered today. They're covered now. And it makes the whole family feel a lot better about where they're going and what's happening with them. Just sit down and ask them. You know, sit down and ask them. That's all you have to do. You know, if something, God forbid, happened to you today or tonight, what would it be like for the family tomorrow financially? What would it be like? And look at that person. Just look at them. If you have the what am I trying to say? The option of seeing them if you're sitting in front of them, or if you're on the phone with them, if there's dead silence, they're thinking about that. And that is something that bothers them. Well, you have a solution. And that solution is life insurance. It's all you have to do. Now, whether they buy it or not, that's another story. But the bottom line is that you've made a quality presentation. You've shown them exactly what ropes to go down, or how to do this, how to do that. And there you go right there. There's your client. So it works out really good. All you have to do is just get committed, learn your product. This is not a get-rich-quick scheme. This is a career. And you can have a fabulous career. And you can do, some of the most wealthiest people I know are life insurance people. Okay, they've just done incredibly well. It's really cool when you go to those meetings and people talk about how much money they're making, you know, and you think you're all puffed up making $200,000 a year. You sit next to some guy who makes $8 million. It's like, whoa, what are you doing? I want to know what you're doing. All he's doing is just talking to a different crowd. That's all he's doing. I don't know, boss, tell me, if you want to make $50,000 a year, you talk to people that make $50,000 a year. If you want to make $1 million a year, you talk to people that make in excess of $1 million. There you go. And that's very true. Yeah. It's just the crowd you're talking to. That's all.
You're going to get a question from a client when you go into these presentations. So what's the best policy I can buy? And best is going to have a different definition for each client you talk to.
That's right.
Because best is going to be, how much can you afford? How much do you want? How long do you want it? The best policy is going to be the policy that provides the solution to your particular client's dilemma. And I say dilemma because that's really what it is. What should I buy? Why should I buy it? What am I going to use it for? Well, turn the question around. What do you want it for? First thing, I want to make sure if something happens to me, my final expenses are taken care of. Second thing, I want to pay off all of my debts, all of the mortgage payments, all of the credit card payments, the car payments. Third thing, gee, I have a couple of young kids. I want to make sure that a college education is in their future and the tuition will be covered. I mean, you can go down the list in this fact finder and just put together an entire package and then come up with an answer. This would be the best policy for you today. Now, today doesn't mean tomorrow. It means that you have to look at it every year or every couple of years and update and do what we call a policy review. Is what we put the policy for today still in force a couple of years down the line? And that's the biggest bugaboo you find with old policies in force. People never changed beneficiaries. They had kids and didn't add them, or somebody passed away and they didn't take them off. You have to review what you've done, and that keeps you in front of your client ongoing. It's not a sell and run situation and then hide for the rest of your life. We want you to talk to them every year or two and do a policy review and make sure. And what it does is allow you that opportunity for more referrals. You build that relationship. Once again, the person is tied to you. How many people have you called in your property casualty careers, for example, and said, well, gee, I used to have an agent, but I haven't heard from him in 2-3 years. My premium just keeps going up, and I don't hear from him. That's not good.
That's how you lose a client.
Sure.
So that's why I say and so the best policy definition is a moving target. And that's where we're here to help. Elliot, Mick, myself, anytime you make a phone call, we're going to ask those questions and say, well, what does the client really need? What are they looking for? What's their wish list? And then we can help you go through the process.
Well, and I think that so with the quoting platform, it is really pretty sophisticated and very easy to quote. I mean, you really need it's name, date of birth, and face amount and it'll spit out a quote.
A little bit of history, health-wise. We want to know, are you a preferred plus, a preferred, a standard plus, a standard, all of these types of things. And we'll get into the definitions at a later time as what qualifies for what. But in my opinion, I always like to quote second tier, first tier being preferred best. Not everybody qualifies, 10-12% roughly. So let's quote that 60 to 70% that get preferred, which is the second tier. If I come in better, the company has to give you the best you can qualify for. They can't arbitrarily give you a higher premium to make more commission for the agent, although we used to do that in the good old days. Quote them standard, I make more money.
You make more money. Yeah.
But today the client gets whatever they can best qualify for. And so I like to quote that second tier and come in as a hero. If they do get the super preferred, quote the preferred. Sure. And if it goes to standard plus or standard, it's not such a big jump from the super preferred quote that you may have given down to a standard rate. It's more of a middle range. And it's just managing expectations and giving people more of an opportunity to have the reality of what the numbers are going to look like on a real policy rather than just a quote that's just a spreadsheet that a lot of agents use. Spreadsheet it, whatever's cheapest best. Not necessarily. And here we get into best again. Is the cheapest policy the best policy? Not always, because the cheapest policy may or may not have a right to convert, for example, to a tier 1 product for the guarantee period of the protection policy. So if I buy a 20-year term and I can guarantee the right to convert to a tier 1 conversion product for that full 20 years, isn't that better than one that would say I can only convert the first 5 years and after that it's a special product that was designed for people that they know could not qualify medically for a new policy, so therefore they're not going to get the best rate on the conversion opportunity? Does the policy include living benefits, critical, chronic, and terminal illness riders? There are a couple term policies out there that actually include those benefits. They cost a little bit more, but they're available. But not all carriers do that.
Sure.
So you need to have, the opportunity, again, what is the best? Not always the cheapest.
That's right.
Well, and so I was going to say, you get the quote, go through, answer all the questions, you're going to get all these different quotes. And it's like, okay, you've got, 10 different options, and some of them are household names that you've seen before, your MetLife, your name the insurance companies. But then how do you figure out what company to pick. And like he just said, it's all based off of the client needs. So
You call Paul, you call Elliot, you call Nick.
exactly. Well, so you've been such an amazing resource, and I imagine an agent getting appointed with you guys. If they don't know, they can use you guys as a resource and say, okay, get this policy because of X, Y, Z. So that's a cool feature, I think, that rather than just a quoting platform where you're just kind of out there in the wind to figure it out yourself, you can use your area
And
of
our
expertise.
quote and apply platform does give some of the information that we're talking about here. It talks about the conversion opportunities, talks about the living benefit opportunities, talks about the simplified issue. Do you need a medical exam up front? We have a couple of companies, for example, that go up to $3 million non-medically today, as long as you've seen your doctor in the last 12 months and we can access the medical records along with a blood profile. They will issue a policy based on your doctor's report rather than having a separate medical exam for the life insurance, which to a lot of people is appealing. I don't
very
like
appealing.
getting shot in the arm, by a paramed that's going to fight World War III on my arm and leave a black and blue mark.
Sure.
If I can get away without having to do that, I'm going to take advantage of some of these companies. And the rate structures are very, very competitive. The companies that do allow the simplified underwriting versus those that still require complete medical evidence. But so if I can go to one where I don't have to see the paramed exam or the doc, why not?
Sure. Well, and another thing with as far as things being convertible and why that's important, if you're selling a term policy, let's kind of back it up here. Everybody, the goal as a life insurance agent is obviously to help people, but it's also to get paid commission, right? So life insurance, different than P&C, you get paid up front, and is it 80, 90%?
Depending
Up to
upon your contract.
100%. Up to 100% of the first year premium is target commissionable premium with some of the carriers. The lower term policies, 50, 60, 70% on a 10-year term, for example, first year. But there are no renewal commissions, unlike property casualty,
Yeah.
where you have, a lifetime income as long as the policy stays on the books. Now, I personally, and I'm not going to knock my friends here, made a little deal with myself that said, if it has potential for more than one claim, I do not want to sell it. So life insurance, there's no gray area. You
Yeah.
is
Yeah.
or you ain't, and that's the way it is.
Sure.
But with health insurance, property casualty insurance, you get a call at midnight, hey, I just had an accident, or hey, I had a fire, help. Well, call the claims department. Well, no, you're my agent, help.
Yeah,
like recently.
I didn't want to be there, so that's why I chose life insurance as my career. But I have good friends here that will satisfy the other side, and I've referred that business.
Sure.
And it's
We
something
appreciate it.
people should do is think about who are your friends in the industry, become a specialist, and market that specialty, and then refer things out. It comes back
Oh, yeah.
many times over. When you don't try and be jack of all trades and master of none.
Sure.
Yeah, that's true. Boy, you try to do everything, it's very difficult, especially, when you see agents that are, they're doing insurance, they're doing, DMV, they're doing taxes. It's like, whoa, it's just way, 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 way too much. Focus on an area and you'll do incredibly well. Farm everything out, even if you get a commission or part of the commission from them on another product, whatever it may be. But use your time wisely because you'll just burn out. It's just not good. It's just not good for your head.
Sure.
And obviously you make mistakes when you're way too busy, way too overloaded, and you don't want to do that. Take the easy route. Move things out, be a little bit more delegated in your business. It helps a lot. It really does. And you have a better mindset as well. But one thing too that what Paul was talking about, what kind of policy is the best policy? I had a boss that always used to say this: the policy that's enforced when you die, that's the best policy to have. Because nobody ever asked, what is term? Was it whole life? Nobody ever asked that. They just make sure that there is life insurance there. And of course, being an agent, an insurance agent, you kind of have a responsibility to ask people if they need life insurance. That is, if you're life licensed. Because in this situation where, let's say one of your friends passed away, The rest of your friends might ask you, did you ask him to buy life insurance? Didn't you sell him life insurance? I've had that happen to me a couple of times in my career. And thankfully, I was able to say yes. I gave him two, actually three solid presentations, and he decided not to buy. That was his choice. But I don't know what it would be like if you didn't make that presentation, or at least try. And what's the worst thing? What's the worst thing somebody can say to you? Is no. Okay. Well, maybe they're just not ready now. But later on down the road, sometimes people need to realize their own mortality. You do when you get older. Maybe that'd be a little bit more opportune time to sit down and talk with people. We're in a position and we're in a business where we can really, really help people. That's what we do. And all we have to do is just ask. That's all you have to do. Okay? That's all you got to do.
And you bring up an interesting point. The heirs will come back to you. Why did you not show my parents this?
Oh, yeah.
There used to be, in the old days, Northwestern Mutual and some of the captive carriers actually had a disclaimer letter that basically said, Paul showed me this life insurance and I chose not to take it. Sign it, so that when the kids came to you afterwards, you put the letter out and you said,
that's
hey,
powerful.
look it, they signed off. They didn't want it.
That's powerful.
And there's some lawsuits that have been prevented because of having that type of conversation. So, and you scare people a little bit when you say, what do you mean you don't want it? Will you please sign this disclaimer? And they read it and they have second thoughts. And they may come back and say, well, maybe we can modify this a little bit. Instead of shutting down the conversation, it starts over again with a new approach.
Sure.
Exactly. You know, one thing, too, about a presentation, when you get all done with your presentation and then the people say, I want to think about it, what that really means is that you've confused them along the line there somewhere. You know, there's a disconnect, if you will. And so you might ask them, what part of the presentation didn't you understand? Or was there something that I didn't explain to you very well? And pinpoint exactly what it is. Not only does it, help your sale at the time, but it also helps you so you don't make that same mistake again. And it could be using terminology that is insurance terminology and it's way over their head. For example, I had a couple of guys come in and say, well, could you help me sell life insurance? We're having a really tough time and we don't know what to do because if we don't sell insurance, we're going to get fired. And then I said, okay, well, give me your pitch. What's your best policy? And so they both looked at me like, well, what do you mean? It says, well, what policies do you like the best? Do you sell? Well, it's universal life. And I said, okay, give me your presentation. So, well, they kind of looked at each other and looked around like, well, yeah, now picture me as a client. And so they proceeded in their presentation and everything was pretty good until they got down to the end and they said this. And all of this is presented right on the chassis of an insurance policy. And I said, whoa, wait a minute. That word chassis, where'd that come from? Okay. Now, you can talk to agents like that, but you can't talk to clients because all of a sudden the guy went from thinking about buying life insurance to what are we buying, a car now? Where are we with all this? Don't use those types of terms. You don't need to. Use plain, simple, everyday language, and you'll get much, much further with people. Same thing in the property and casualty area, but just use plain English. People like that because then they understand it. One of the things that I have always heard from, people out there in my career is that insurance is really confusing. Is it? No. Agents, we make it confusing. Don't make it confusing. Make it simple and people will buy it because people like to buy things, especially things that benefit them. So always keep that in mind, okay?
It's like making it simple.
Keep it simple.
People talk about universal life. It's too confusing, too many moving parts. If you can say the only difference between all the different types of universal life is the way the interest is credited, basically. That's it.
That's right.
You're paying a premium. They're taking out expenses. Whatever's left is earning interest. Well, how you credit the interest is the only difference. Well, how much simpler can you make it? But if you start getting in puts and calls and how you pick options and how the insurance company decides how much money they can afford to pay for this, that, and whatever, you're right. It can be confusing as all get out. Does the client need it? No. They need the bottom line. They need the proposal that shows what the numbers are projected to be, what the numbers are guaranteed, and something in between. So you have your guarantee, your midpoint, and your projection. And then the policy performs. If this happens, this is what it's going to look like. You can keep it as simple as you want, and you'll be much, much happier, both you and your client, with the end results.
No doubt. No doubt. You want to have a happy client. Always have a happy client. Definitely.
Yeah, no doubt. Well, cool. Well, anything else left to add?
Well,
you guys
just
wanna...
just other than we will be releasing some more videos here shortly. Just to give you an idea, what we're going to do is we're going to break these videos down into products. Like we're going to talk about term insurance. We're going to talk about whole life. We're going to talk about universal index, universal variable. With annuities, we'll have one on disability insurance, which is probably the most overlooked policy out there. You know, who needs disability insurance? Anybody that could become disabled, that would be anybody working. Okay, so those are the types of things that we're going to talk about. And of course, we're also going to have one on prospecting, on what are the better ways to prospect, whether you're going to be doing networking, going back on referred leads again. We're going to talk a little bit about that. And we're going to kind of dole these out over weeks at a time. So stay tuned. We'd love to love to have your feedback. Anything else you guys would like to talk about?
No, I think that's pretty
I think
good.
today
pretty
was a
good?
beautiful opportunity
Hey, it was
to
good.
talk about Insurance 101.
Yeah.
we
Insurance
were about as
101.
basic as we could be, and we want to invite you to 201, 301, and ongoing.
On down the road, sure. On down the road.
Well,
Thanks
cool.
again.
Well, thanks for tuning in, and we'll see you guys on the next one. Thank you.
Bye-bye.
Bye.
Thank you.